One of the hard parts about being a dividend focused YouTuber is trying to appeal to the many different kinds of dividend investors out there. Well, in my attempt to do just that, welcome back to the Power 5 Stocks of the Week. Here, I will be presenting you all with the leaders each week in the following categories: Dividend Yield, Dividend Streak, Dividend Growth Rates, the 10-year returns, and the percentage off of their 52-week highs. The only requirements to be on these lists is that you have to beat the market over the past 10 years and have a dividend streak of at least 5 years. If that has your interest, let's jump right into this week's list. The stock with the best dividend yield this week is Lakeland Financial, stock ticker LKFN. LKFN is a quarterly payer in the financial sector, paying $1.84 per share per year, with a forward dividend yield of 2.4%. Lakeland has been growing and paying their dividend over the last 10 years. They have a 3-year dividend growth rate of 11.32%, a 5-year dividend growth rate of 13.49%, and a payout ratio of 40.2%. Lakeland has an ex-dividend date of January 24th and a payout date of February 6th. And a single $10,000 investment in Lakeland 10 years ago, while only reinvesting the dividends since then, would have turned into $55,929.12, which is an 18.78% year-over-year return rate. And as always, we compare that to the S&P 500 that turned into $32,686.43, which results in a difference of $23,242.69 over just the last 10 years. The stock with the best dividend streak also has the best dividend growth rates this week, and that stock is Lowe's, stock ticker LOW. Lowe's is a quarterly payer in the consumer discretionary sector, paying $4.20 per share per year, with a forward dividend yield of 1.98%. Lowe's has been growing and paying their dividend over the last 61 years. They have a 3-year dividend growth rate of 21.56%, a 5-year dividend growth rate of 19.48%, and a payout ratio of 27.61%. Lowe's has an ex-dividend date of January 24th and a payout date of February 8th. And a $10,000 investment in Lowe's 10 years ago, while only reinvesting the dividends since then, would have turned into $71,249.61, which is a 21.69% year-over-year return rate. Once again, compared to the S&P that turned into that $32,686.43, which results in a difference of $38,563.18 over the last 10 years. And before we get to the stock on the list that happens to have the best 10-year returns and be at the biggest current discount, please make sure you guys hit the like button if you guys are enjoying the video, and subscribe and ring the bell so you guys don't miss any of the future dividend related content. Also, feel free to use that comment section down below and let me know which of these categories is your favorite and why. But now let's get to the final stock of the week. The stock with the best 10-year returns and the stock that's trading with the biggest current discount is West Pharmaceutical Services, stock ticker WST. WST is a quarterly payer in the healthcare sector that's paying 76 cents per share per year, with a forward dividend yield of 0.3%. WST has been growing and paying that dividend over the last 30 years, and they have a 3-year dividend growth rate of 6.17%, a 5-year dividend growth rate of 6.62%, and a very low payout ratio of 8.14%. At the time of recording, WST is trading 40.87% off of their 52-week high. WST has an ex-dividend date of January 24th and a payout date of February 1st. And a single $10,000 investment in WST 10 years ago, while only reinvesting dividends since then, would have turned into $96,676.90, which is a 25.46% year-over-year return rate. Again, that's compared to the S&P 500 that turned into $32,686.43, which is a crazy difference of $63,990.47 in just the last 10 years. Damn! As mentioned in the beginning of the video, all the stocks I did talk about in today's video have beat the market over the past 10 years and have a dividend streak of at least 10 years as well. I'm very curious to know what you personally value as a dividend investor and why, so let me know that in the comments down below. And if you happen to miss my last video on the champions, contenders, and challengers that raised their dividend this past week, I'll link that video right here. But until next